Standout factor when it comes to automobiles and PSUs as a sector, Ridham?
Okay, PSUs is not a sector. Obviously, that is a ownership classification. Public sector companies come in various sectors, so I think we'll have to go into each of those sectors. I am constructive on discretionary consumption, so I think autos lead the pack. We've been bullish on them for quite a while, and I continue to stay bullish on autos. I think we have a positive view on real estate as well, and other areas of discretionary consumption. Also, what I'll make as a point here is that I think rural consumption has seen its trough and should recover quite smartly in the coming months, with the only one caveat that we don't get a terrible rainfall season. And if that happens, then I think rural consumption-oriented companies will also do well, and the stocks of those companies are also worth watching out for. So lots of areas in the market which look good. What doesn't look good, I think, is global-facing sectors, especially in the commodity space. I think given the softness in global growth, we're likely to see soft commodity prices, and it'll be a while before those sectors trough out. IT services, I think, is a mixed bag, but I would generally be constructive. I think even though there is a slowdown in growth, we may not see the same type of tech spending cuts as we saw in previous US growth slowdowns because of the structural tailwind which comes from the spending that companies need to do for digital and AI.
Ridham, the other thing is that the opinion and even the stock price moves are getting very split and divided when it comes to banks. You know, a lot of conjecture out there on whether or not the credit growth is going to top out in a sector or two, or whether it already has. And you've got a very varied performance as well from the corporate-facing as well as the retail-facing banks. Just wanted to understand within banks, how do you maneuver through the sector?
So I don't think we're anywhere close to topping out of credit growth. I think we're just at the beginning of a new cycle, and there is a multi-year process in front of us when credit will build up. You know, corporate debt to GDP, as I cited, is at 50%. And I think that number will be materially higher before this credit cycle is over. It will go into the 80s, maybe even the 90s. So it's not like this is, ending anytime soon. Retail credit also is, I think, likely to rise, and this tussle between corporate and retail will remain on a near-term basis. But I would encourage people to look beyond that and just focus on the medium term. The next 3 or 4 years, I think, are going to be very good for banks and non-banks in India. In fact, for all classes of lenders. And I think it's not a place you want to get too cheeky about and trade for a quarter or 2 here and there. You could end up missing out on those stocks and they may run away from you. So I would be structurally very positive on financials.